Hi friends, welcome back to your YouTube channel KDR Wealth Management. Today we're going to be talking about SBI Small Cap Fund Direct Growth. I'm going to be reviewing this mutual fund for you and letting you know the pros and the cons of investing in this mutual fund for long term through SIP basis. I use Grow. You can use any other app that you're comfortable with. If you haven't liked and subscribe to this channel already, please do subscribe to this channel. We will be bringing out a lot of content with regard to mutual funds and stocks as well, along with wealth management as well. So just a quick disclaimer before we begin. Mutual fund investments are subject to market risk. Read all scheme related documents carefully. I am not advising you to invest in any of this. I am just giving you my opinion on what I hold in my portfolio, and I hold this particular mutual fund that we're talking about, SBI Small Cap Fund Direct Growth. So it is an equity mutual fund. It invests in small caps and it has a 5-star rating. So these are 3 tick marks. Now, if you see a 1-year return, it's minus 2.74. Okay, that is due to the coronavirus, the drop that happened, as you can see over here on the 20th of Feb. So 3 years return is 5%. 5 years return is 11%, and the all-time return is 20.95%. I like this fund a lot, friends, because it gives you a good return if you invest for a long term. Mutual funds are to invest for a long term. They are not short-term investments, my friends. So always remember, you start an SIP and try to keep it for as long as you want. Only then you'll be able to see a good return on your investment. Okay, let's talk about the fund details. The minimum SIP amount is 500. The expense ratio is 0.92, which is slightly higher than I would like it. But since they do invest in small cap funds, so you need to have a good team sitting and watching this. Most of the small cap funds have a slightly higher expense ratio, so that's fine. The fund is started in 2013, so it's a 7-year-old fund. The fund size is 3,373 crores, which is great. Now let's talk about the returns among its category average. As you can see, for the 1 year, the 3 years, and the 5 years, and since inception, it beats its category average. In 5 years, it has been ranked number 1. In the last year, though, it has dropped to rank number 5. But overall, since inception, very good return on investment. Now let's talk about your SIP. So let's say, just for the purpose of calculation here, I'm going to take it down to 2,000 rupees, because I know that most of you guys can do this. This is not a very big amount. You can save it per month, and if you compound it with 5 years with an annual return of 11.5, you get 1,58,000, which is very good. But as I said, I'm talking about a longer term, so hopefully you will keep this investment for longer and reap the benefits of the annual returns along with the power of compounding. Let's talk about the comparison with a few more small cap funds. As you can see, since inception, the 3 years, the ratings of the funds are visible here. As you can see, it's the only 5-star one that's showing right now. The 1-year return is good. It's the best amongst this entire list. The 3-year return is also the best amongst this entire list. I do myself invest in SBI small cap funds. I am not asking you to invest in it, but I'm just giving you a review as to what I think about this fund. So there are a few pros and a few cons. There's a low expense ratio. 1-year returns are higher than the category average. 3-year returns are higher than the category average. And the con is risk adjusted returns are lower compared to the category. Let's do a holding analysis. 48 equity shares. 21% is in the top 5. 63% is in the top 20. The PE ratio is 14.98. Let's talk about the equity. 95.6. Cash in 4%. Which is good. Equity sector allocation, as you can see, it is very, very diverse. More focus on engineering first, then FMCG, then construction, then cons and durables, and so on and so forth. As you can see, present also the financial sector is 9. Sorry, I missed that. Now let's talk about its top holdings. Hawkins Cookers is an industry leader. Dixon's Technology, again, a very good stock. I hold this stock myself in my portfolio. LG Equipments, Naveen Floran International, it's a chemical company, very good chemical company. Relaxo Footwear, it's one of India's best footwear companies. Like Bata is not an Indian product, so Relaxo Footwear is a made in India product. So I have this in my portfolio as well. Indostar Capital Finance Private Limited, JK Cement, Hudson Agro Products, Narayan and Limited Engineers India. I have this in my portfolio as well. Driven Turbine, Timken India, Sheila Foam, Star Cement, Tube Investment of India. I have this in my portfolio as well. It works in the automobile sector and it provides tubes for all the companies that build cars in India. Carbondrum Universal, Blue Star, Galaxy Surfactants. Again, this is another stock that I hold in my portfolio. HDFC Bank, you can never go wrong with the best bank in the country at the moment. NIIT Technology, CSBC Bank, Chalet Hotels, Technology, Electrical and Engineering Company, Grindwell Norton, NHPC, Alembic Limited, Kirloskar Oil, TTK Prestige, GET&D India, Cable, Kiran Clothing, V-Mart Retail. Again, a very good, very upcoming stock. I hold this as well. Car, Fine Home, Agrotech Foods, Fine Organic Industries, Garwari Technical Fibers, Great Eastern Shipping Company, Tamil Nadu Newspaper Printing Papers, DISA India, Fairchem Speciality, Control Print, Lemon Tree Hotels, Deepak Nitrate. I hold this in my portfolio as well. Rajanan Global Fibers, Shreno, Ashiana Housing, V2 Retail. This I hold in my portfolio as well. M&M Forging. This is a very good stock. It has a lot of scope in the future. Let's talk about the fund manager, Mr. R. Srinivasan. Mr. R. Srinivasan is an MCOM and MFM. Prior to joining SBI Mutual Fund, as you can see, he has worked with other asset management companies. These are the few funds that are being run by him, as you can see. Now you can pause the screen and have a read at the direct growth details. Now let's talk about the tax implications. This is very important. You must read this. Returns are taxed at 15% if you redeem before 1 year, and after 1 year you are required to pay LTCG tax of 10% on returns of rupees 1 lakh in a financial year. Okay friends, so that was it. Thank you so much for watching. This video was by KDR Wealth Management. Please like this video if you found anything interesting or if you found it of value. Please share it with your friends and family. Subscribe to this page for more amazing content with regard to mutual funds, stocks and wealth management in general. I will be bringing you a lot more videos. So hit that bell icon and you will get an update as every time we upload a new video. Thank you for your time and have a nice day.